and welcome to another episode of the Let's Talk podcast. My name is Dimitri. This is my co-host Akim, and today we have a very special guest, Mariano Pardo. He's an elite pro popular investor on eToro and the creator of the awesome feature on eToro, Bullaware. Hey, buddy, how's it going? Thank you for joining.
Hello, Dimitri. How are you doing? Thank you very much for having me.
So I met you first, Akim met you later. And I remember it was striking the first night we met in Abu Dhabi, and we were like a big round table and we were talking. And I asked you, what is your strategy? Because the question was going around the table. And you told me, I love tech. I'm crazy about tech. And so please share with our audience, what is your strategy? Because you are one of the, how many people are actually elite pro on eToro? Is it like 15 people?
Yeah, something like that.
Yeah. So
also in terms of performance, Mariano is in the top percentile
Yes.
of performers.
So you are on the top percentile of performance and followers and copiers. I believe you had a stretch of 7 straight green years. So it's beyond impressive. So please tell our audience, what is your strategy and how you go about
it? Sure. What I do mostly is study tech companies and study, on the one hand, the services that they are providing today, what they are building, what they are working, what they are offering, what their business are. But also, I put a lot of focus on understanding, like reading their papers and understanding what they are doing, what they are investing to, like what's the future of that company. I always I love learning, reading papers on companies, on new technologies, what they are actually building, and I believe this gives you a huge view into what they are, what the future is. Like most of the time when they release a product, most of the people, like I would say 99% of the people, like think like the company like just launched that, like that was like something built behind doors and it was impossible to know. But if you like read the papers, see what type of employees the company is hiring, you can know what they are working on. Like sometimes it's very, very obvious what they are working on. Like I would say Adobe, one example, when they released their AI features, like there was a lot of talk on Adobe's dying because now you have a stable diffusion and all of these image generation tools. And it was obvious that Adobe has been working on AI for a long time. They have been hiring a lot of AI engineers. They have been working, like launching papers on AI for both image, video. It was obvious that they were working on that, even if they haven't launched it yet. And that was one of the reasons why I kept investing in Adobe through all of these bad, let's say, bad moment of Adobe at the stock, not at the company, but for the stock price, because most people were worried about the AI. AI being a bad thing for Adobe, but for me, it was going to be actually a huge opportunity for Adobe. And that's why I kept investing. Actually, I closed most of my positions just after the latest earnings report a few weeks ago. And I made a very good move on not selling at 300, that the stock had fallen because of all of this. And I think something similar happened with Google and with many other companies that, especially when now that there is like this change of platform going to AI, like, and a lot of people getting worried about like different, the future of the company, how like we have to imagine a new future now with the, because AI, 100%, like something that I don't have doubt is that AI is going to reshape the future. And now we have to reimagine how every company in our portfolio is going to, what role it's going to play in this future.
Yes.
So it's not easy, and that's why I pay so much attention, especially now, to the papers and see which ones are actually investing. Like I cannot know if they are going to succeed or not, right? I don't know if they are going to what they are betting on AI is going to work or not. But like, it wouldn't even make sense for me to try to guess that. Like, they have smart people, very smart people working on each of these companies, investing millions of dollars on an AI strategy. Like, I trust that they are investing in the right thing. What I'm looking at is, are they investing in the right thing? Like, are they investing in AI? Are like launching papers, doing things? Then if those papers translate into products, that depends on each company. But the fact that the company at least is investing, and this is right for me at this time where there's so much uncertainty of where we are going, it's like the key thing and what I'm basing my strategy on.
Yeah.
So I'm going to ask you a follow-up, and then I'm going to let Akim join in. So your top 3 positions in your portfolio, I believe, is like something 40% of your portfolio, 35. It's Microsoft, Google, and what else? Is
Amazon.
Amazon, yes. So these 3 companies, the amount of dollars they spend on the research and development, it's significant. And they are, Amazon hasn't shown us yet how they're going to enter the AI game, but Google and Microsoft, and obviously Microsoft was the first with the OpenAI. So it's important to you beyond the stock price to see, are they investing in the future?
Yes, 100%.
To see the pipeline, to see the products, right? And
100%.
my question is related to this. I'm always having a lot of difficulty to pick technology stocks. Dimitri knows that it's really a problem I have. In my real life, I'm a portfolio manager, and the way we value most of the assets of the funds that we manage is we manage infrastructure funds, industrial funds. We don't have that many tech funds, right? And the way we look is just we look at the EBITDA and we say, okay, multiple of 20, a little bit expensive. This company is trading at a multiple of 15, pretty cheap, interesting, let's buy it. But for tech, it doesn't work this way, because you have multiples of 50 times forward earnings, of 200 times forward earnings. So what's the place of valuation here in tech? Like, how can I personally learn how to invest in tech stocks? Is it just looking at the products? Yeah, the product looks great. Just like you discussed now, the product looks great. Okay, there's some AI relevance. Or is there a way to buy those stocks, but let's say cheaply, by using valuation metrics or something more, let's say something less abstract? Right? Something more like hard figures.
To be honest, I don't think there is something like that. Because if I'm thinking in the best moves I made in tech with tech companies, buying companies early, like I will put an example. What I bought Cloudflare, I bought it just a few months after the IPO, and I think my first entry point was $15. Today it's 75, and it had a high of 200.
Which stock? Sorry, I couldn't hear very well.
Cloudflare.
Cloudflare.
Net.
Yes.
Net. And if you look at the numbers, the current numbers were very bad. Honestly, everyone was saying the company was overvalued. And makes sense. The company was overvalued if you just look at the numbers. What I looked instead was at their product. They made a strategy that was amazing. They had their DNS service that was something free, but they managed to get a huge part, something like a third of the internet at one point, used Cloudflare as a DNS. So 1/3 of the internet traffic was routed through Cloudflare. Like, having all of these companies on board, even if they were losing a lot of money, because maintaining that costs a lot of money, and especially giving it for free. But they were investing, if you look what they were investing on, they were investing on giving services to all of those companies that they already have. They didn't have to go to onboard all the companies. They already have them. They were using Cloudflare. So they started launching services that were like one-click add-ons for companies. Oh, you want DDoS protection? Just enable this and pay and enable this. Oh, do you want storage? You have it. Do you want image optimization or different optimizations? You have it. Just enable it here and you have it. And they started to adding more and more services that company could enable without having to actually onboard the companies. They already have them. That was an amazing strategy, but the numbers would have never tell you that, because from the numbers perspective, this was a very unprofitable company that just was every time losing more and more money because it was onboarding more and more customers. I think the only hard numbers that would have helped is looking how many, the growth, how many, and not growth on revenue, growth on customers, how many customers they were onboarding. For tech, I think that's a big one. Like, look at growth, look at how much acceptance this product is having. Look in the open source communities, how much companies are using this service. This is huge. Like, I think for NVIDIA, now we can talk hours about NVIDIA, but one of the early good things about NVIDIA that you could have seen a few years ago is how much acceptance was in CUDA software for NVIDIA. Like, the entire AI community was based on CUDA software. And that was a huge advantage that then NVIDIA years later capitalized on.
So sometimes basically what you're saying is you have to go a level deeper than the numbers of the traditional metrics that most investors are using in order to get an idea. And you have to take a risk as well. I mean, there is risk to whatever you invest in the stock market. And so you have to go a level or two deeper beyond the just price to earnings or the price to book or whatever some people are using, and see how many people are using the services. What are they making? How much are they spending into the future? And then you have to make a judgment call and say, okay, I believe in my guts that this thing is going to work, basically. So what you're saying basically is that there's no recipe for this. There is no 2 + 2 = 4. Sometimes 2 + 2 = 3.
Yeah.
And then
there's a lot of judgment involved, I think, because also, like, for example, when I read earnings, right, of tech companies, and I look at their guidance in terms of like pipeline, etc., it always sounds great, right? They always use the word AI for anything and everything. I mean, literally all the tech stocks, and they're all saying that they onto the next big thing and they expect this to really perform very well. So you probably need really like deep knowledge in technology, right? And how technology works. You probably need to use it in your daily life to be able to really get that gut feeling. Because when I read the tech reports, I mean, they're all so exciting, but I'm just not able to be like, to have that gut feeling, basically.
Yes, I think yes. You need to understand it, but even if you don't, I think you can look at what consumers are doing. Like, sure, the company, all the companies try to sell, they are selling you, right? They are selling you their stuff, and then make it sound nice. But you have to see, I think, the consumers. Consumers are very important, but not just in the amount of money. Are they growing consumers? Consumers are happy with their product. Like, even if you don't fully understand the technology, you can look at how the consumers are feeling about the product. Maybe talk with a few people actually using those services and think if it's like for them it's a pain that they have to, like, there are a lot of software like this. It's like we have to use this software because we need it, but it's a pain, and we are hoping someone makes something better. And for other companies, it's like, oh my God, I love this software, and this is changing our business forever. And this is the companies that I'm trying to look for. And some of these big companies are so used that probably people working for a company using one of those services. So it's not very hard to go talk with someone, have a 10-minute call, and try to learn their experience. Or you can do it online also, like just look what the opinions of the company are, and you can understand a lot, I think. And I think one of the points with that, of hearing the earnings report, look how many companies used the word blockchain 2 years ago, and how many of those actually materialized. Like everyone was throwing the blockchain word in there, and I think now with AI similar, everyone is throwing the word AI.
And now the same companies converted to AI, right?
To AI, yes.
And how do you, and then Dimitri, I'll leave it back to you. How do you choose the weightings? Because this I find quite interesting, is you don't buy, so you have 40 stocks, but you don't invest equally in the 40 stocks. There's like a big difference from the very, from the really the bottom to the top. It's 0.1% allocated to the bottom stock, 13.5% allocated to the top stock. How do you choose the weightings? Is it gut based, or how do you set those weightings?
It's more probabilistic based. What I do is I set ranges of probabilistics for the value I think the company is going to be in the future. So let's say I'm looking at Amazon and I say, okay, I believe there is, not just I believe, based on the study I do, I assign a percentage and say, okay, between this range and price and this range, I think there is a 40%. Between this range and this range, there is this one. And then the bad case scenarios, there is this percentage that is going to fall this much. And then I try to convert all of this to a mathematical model where I just assign the weight to each company. And that's why I end up with so much difference on bigger companies on weight, because the risk is lower. Some of these smaller companies, I believe in the company, but also I have a risk of the company falling 50%, while we all know
because the company is smaller. Because the company is smaller, has maybe less products, right? Has less sources of revenue.
Exactly. The more growth you go for, also the more risk you have. It's not always about size. It's also about risk. Like I think NVIDIA, it has a huge risk right now because of the valuation. Even though it's one of the largest companies in the world, it can fall 50% and will still be worth more than it was a few months ago. So the risk is there. Like I see a possibility of NVIDIA falling 50%. While I don't see, like, if Microsoft falls 50%, means that the entire market will crash. Yes. Exactly that. Yes. I mean, it could happen, but the entire market will be crashing. NVIDIA could fall 50%, and Microsoft will still be all-time high.
Yeah, and NVIDIA, I believe, fell 50% multiple times in the last 10, 15 years. So not out of the question for it to drop again. So my question is, looking at your portfolio, I just look at your portfolio now again, and your top heavy positions obviously are tech. But then you have some other position there, you have a JP.
You read my mind. You read my mind, Dimitri. That was my next question.
You have a JP Morgan in there. You have a Boeing in there. You have
Ryanair. There's Ryanair. There's Airbus.
Yes, some airlines, which, I mean, you have to have strong convictions to touch the airlines. So what is it? How do you get from your bread and butter, which is technology, which you understand very well, and you have top of your portfolio? How do you? Because I'm wondering, why do you even bother with airlines? I mean,
we were talking with you, Dimitri, just maybe few weeks ago, and with Max Molter as well, that airlines, they severely lack of innovation, except perhaps Ryanair to some extent, right? To some extent. Maybe I can add that question, is AI something that airlines could use? Because you also have Southwest. I don't know. Can AI somehow disrupt the airline industry?
Honestly, I got other companies more for a diversification point. Like, tech can fall. Tech has these cycles where it can fall, and having not 100% tech helps me to don't be crashing and ended up with a very high risk, especially a risk on eToro, like that I don't want to exceed. Like in 2022, when markets were falling a lot, I was close to the limit. I got to 6 on risk score. I don't want to get to 7. So having diversification helps me with that in bad times for the tech market. But also, I try to use a similar approach where I look into the innovation on the company. Like as you said, Ryanair, okay, we are in a very different industry, but it's also trying to apply some of the tech innovation, let's say, even if it's not fully tech because they are not innovating technology, they're innovating in their way of making the business to work like a startup, let's say, like something like that. And I think that they are making a very good job and actually made pretty good profits with Ryanair. I own it since 2022, and I think got more than 100% up in that position. Honestly, airline is an industry that I don't think it gets disrupted quickly, and I don't see it getting disrupted in the next 5 years at least.
It still has to recover from the COVID crash. It still didn't recover in terms of valuation.
Yes.
Okay.
Yes.
So to summarize it for you, your expertise is tech. Unfortunately, tech can be volatile in times of trouble. So if you are 100% on your expertise, you're gonna have very good years, but possibly difficult years in bear markets. So for that reason, you try to add something else to it. Okay, it's completely understandable.
I still do have bad years because of I'm so much in tech. It's just trying to soft it out a little bit.
Yeah, no. I meant we are gonna have bad years because the market gets bear markets and we have crisis. So even if your strategy is long, short, or whatever the case may be, you're gonna have some difficult years. So basically, okay. So the follow-up: do you spread it in sectors, or like you say, let me add some financials in there because they're pretty stable in this part of the business cycle, or is it whatever you like and whatever you can understand?
Yeah.
Your portfolio.
Basically, are you since always in tech? So now you have, I think it's your 12th trading year on eToro. Have you always been into tech since inception?
Well, always have been in tech. I used to be pure tech. Now I do more. I add these small things of diversification, but also it's not that I'm not choosing a sector like, oh, I want to invest in finance. It's more like I find a company that I like in finance, and I believe they are doing the same thing, and they're also innovating. Because I went with JP Morgan because JP Morgan, I believe, is one of the most innovative big banks there is. Like most of the big banks are like just following the flow, and like they didn't even did much to change their strategies. And I think JP Morgan actually is the most innovative by far of the big banks. Then you have smaller banks that are more innovative and are doing more stuff. But from the big banks, for me, JP Morgan was the better one at this, and this is why even though it's not tech, I'm still like using the same strategy of going for innovation, and the same for why I choose Ryanair.
Yeah, it's the most expensive. It's the most expensive from the banks. In the metrics that people like to evaluate, then not just price to earnings, but price to book. It's always more than one JP Morgan, and others, the Wells Fargo and the Bank of America, are usually less than one, but they are more expensive. And now you're talking about JP Morgan. It's one of my favorite positions as well. And I was reading a stat before I entered the position, the amount of money they move around JP Morgan, okay, they turn around the US GDP every 3 days. So 27 trillion, every 7 days, they move them around between their accounts. So if you're going to invest in a bank, and that JP Morgan. So go ahead, Akim. I saw you have a question in mind.
No, actually, that was the question that I had is, are you since inception in tech? You did answer. I just had a quick question. Like, if I was going to copy you, if I was like just a standard user on eToro, I mean, 2022, I understand. You had very red year, but everyone had, and the stock market crashed as well. I'm just curious about the first 2 years. What happened? Was it still on the learning curve? You were not down by much. You were down 11 and 13% the first 2 years. Was it a learning curve, or what happened
I would
at
say
the time?
More than it was, of course, learning curve. Of course, we are talking 11 and 12 years ago. So of course, what I have, let's say, I have no much idea of what I was doing. I was not even a popular investor at the time. No one was copying me. It was just myself, and at that time, never thought of myself as a popular investor still. I was just buying things I like. But I think one of the main things that happened was low diversification. Like, because I didn't have much money, I just put everything into 3 or 4 stocks. And that was my portfolio at the time. And maybe I was like checking it once a month. Like, I was not really like, I didn't start like maybe you start with a eToro today, that you maybe on day one, you're thinking yourself that you want to be a popular investor, that you want to like build your strategy. For me, I found eToro while looking for a place to put my money from Argentina, that it was not easy to find an institution where you can move money from there and put it in a bank. I found eToro. It was amazing. I fell in love, but still, I was not using it professionally. I was just playing around. And I think 2015 was the first year where I started to get serious about it. By the end of 2015, I became a popular investor, and just kind of people copying me, and that's up to there.
Yeah. Well, that sounds. I mean, it's beautiful to have a successful. It's a true success story that started not on the worst foot, just a little bit, but then wow, seven green years after that, and it's really impressive. You mentioned Argentina, that you started investing in eToro because you had that access from Argentina, and you probably wanted some exposure in US dollars. That's what I'm assuming, the reason of using eToro and buying stocks that are not Argentinian companies, except Mercado Libre. I think you don't have any other Argentinian exposure in your portfolio. I know a lot of people in high inflationary countries where the fiat currencies are to some extent failing. They tend to invest in crypto, in Bitcoin, but also in other cryptos. And you mentioned several times blockchain, you mentioned AI, tech since inception. I am to some extent surprised to see that you don't seem to be a believer in crypto, or at least you don't wish to have any exposure to crypto. So you'll explain us why. And this is especially more surprising, as I said, given your profile, that you're very tech, and that you're from a high inflationary country where the fiat currency has obviously issues since years and decades. What's the reason of excluding crypto? Is it just this year you excluded, or did you ever have
No,
exposure
no.
to crypto?
I didn't have exposure to crypto on eToro, and the reason is that my investment strategy is based on reading papers, understanding the companies, understanding the technology, and this is not something I can actually do with crypto, especially with Bitcoin. Like Bitcoin is the same, except a few differences, but it's virtually the same it was 10 years ago. It's the same idea, it's the same thing. I cannot apply what I do to Bitcoin. So if I bought Bitcoin, I will be betting, just putting money in something I don't understand. And one thing is doing it for myself, but when you have more than 4,000 people copying you, I don't want to put my money on something that I wouldn't be better than anyone else on the street to know if Bitcoin is going to move up or down. And what I always say is, if you want big crypto exposure, copy me. I'll copy someone who maybe has a strategy, has been studying Bitcoin, has a strategy that works. Maybe more a trader. I think a trader will do better with crypto than something like me that invest in this. Because if I would have to invest in crypto, I would have bought it 10 years ago and never sold. That's what I did with my personal position. I do own crypto personally on cold wallets. And I bought my first Bitcoin in 2013 and still have it, never sold. Because but it's also because I don't understand it. I don't know the movements. I don't know if.
But do you say never to crypto? You're never gonna have crypto in your public portfolio, or it's something that could happen someday?
If I would find a way of,
for example, I give you an idea. Crypto mining companies, those you can analyze in similar ways. We were talking just yesterday about crypto mining companies with Demetri on private conversation. Crypto mining companies, you can analyze them the way you analyze tech stocks. So perhaps some indirect exposure to crypto miners. So that's also
yes,
excluded.
I did have Coinbase some time ago, and actually did a pretty good profit on Coinbase. But again, Coinbase is something I can analyze. Coinbase, the price of Coinbase is impacted in the short term by Bitcoin, but it's not fully impacted, right? Coinbase still grows as a business, and you can analyze how much profit it's doing, what it's investing in. You can analyze that they launched a pretty successful L2 base at the right time. Their wallet is pretty good. They are at the head of defending regulations for the entire industry. They are doing pretty good things. So you can take all of these things, see what people they are carrying, what they are investing on, and you can decide to invest on Coinbase. I cannot do the same in crypto, basically. Even though this doesn't mean that I'm not a believer long-term in crypto. I've seen Bitcoin being $1 million asset at some point. I don't think it's crazy for Bitcoin to flip to gold.
Yeah, go to 9 trillion, 10 trillion, whatever gold is. So basically, you have a responsibility to your copiers not to risk their money in something that you can't pinpoint in your head and doesn't follow your strategy of, okay, let me read about this. Because if you think like that, you can read the papers and you see what Amazon is working for next year, but nobody from Ethereum is going to tell you, you know what, we're starting a new thing. you're gonna be the last one to know. You're gonna wake up one Saturday and you're gonna see that the project did not work and it's gonna be 10% down. You're gonna be the last one to know. But with stocks in the public markets, it's more.
I think with Ethereum, it's a little more like a company, because with Ethereum, you can see what they are working on. You can see Ethereum evolve more than Bitcoin as an ecosystem. Like there is the Ethereum Foundation, you know, the developers behind the project. You can see more, but honestly, that doesn't impact the price. That's the thing.
Yes.
Like
it's not.
You can see innovation, but it has nothing. It has very little to do. Like especially in Bitcoin, like what Bitcoin is, the features that Bitcoin is releasing have virtually no impact on the price.
Yes.
Like Bitcoin doesn't move higher because it's no more useful. It's more like really no. And even I would say it also has nothing to do with adoption, because I think the biggest adoption was in 2022. I think was even more use. Like at least there were companies investing in it. There were like more initiatives, I would say, especially on Ethereum. And today everything is more down, but still prices are higher because of the ETF, because of speculation, because a lot of other things that are outside of my area of expertise. And basically, that's the reason.
About Solana, when they came out with the phone and with the Web3. I mean, that crosses a little bit technology in a hardware.
But I think Solana is a perfect example to say I don't understand that industry. I never owned Solana, and for me, Solana was going to crash. And when I see today the price of Solana, I cannot understand why Solana is worth how much it's worth today. For me, Solana was just a cheap attempt of doing what Ethereum is doing in a centralized way without giving real benefits over a cheap L2. And like Solana was only working better than Ethereum because it was also smaller. And still today it was an amazing investment. If I would have entered that when I first heard about Solana, that was just a few cents.
Yes. Akim, you want to ask something?
No, actually, that was
the Bullaware.
We did want to discuss Bullaware.
Yes.
Do you want to present to our audience what Bullaware is?
Yes, sure. Thank you very much for mentioning it. So I have been working for the last couple of months on a platform for visualizing eToro portfolios in a better way. I want to give more stats, more information for users, so you can see your portfolio, but also other investor portfolios. Try to find copiers that adapt better to your objectives. And I'm trying to give as much information as I can in a way that it's also simple to understand for individuals, for eToro users. And yeah, I have been getting a pretty good reception so far. Like everyone I talk to seems to be very happy with the project. It's growing a lot. Like a lot of people I think using it, so I'm very happy with it. And yeah, and keep adding more features. I have a huge to-do list of things to add.
And who has access to using Bullaware? What are the conditions? I mean, does the account? Do you need to have an account on eToro? I assume yes. Does it need to be public, or can it be also private?
Those are the two conditions. You need to have an account on eToro, and it needs to be public for watching your own portfolio. Even if you are an eToro user with a private account, you can use Bullaware to find people to copy.
Okay.
Like, I believe there are amazing people on eToro, and thanks to Budaware, I found people that I would have never looked before. People maybe with just a few copiers that have pretty cool portfolios that really are doing an amazing job, but maybe they never like sell themselves on eToro, so you never heard about them. Because if they are not in the field, if they are not easily discoverable on the discover section, you maybe never heard about these people. And Budaware is more database. You just look at the numbers, the hard numbers, who is doing a better job, who is getting the better results over a certain period of time, and just trying to give more exposure to these people.
So that was the motivation. You wanted to, okay, because if I'm being honest with you, I was wondering why you even did that, because you're probably busy enough with your portfolio already. You have almost like you have so many followers and copiers, and you probably make a pretty good living from eToro.
And
So,
you need to always follow the companies that you hold in your portfolio. So you probably do
yeah,
that also full
so
time.
you're already busy enough. So I was wondering, why do you even bother? But now that you're giving the motivation behind it, that it just cuts through the nonsense of people on eToro, just go straight to the numbers, and it gives you an idea who is good and who is not good, or compared to your taste or your risk profile. So, okay, all right. So now I get it. What was the motivation?
And also, a lot of the things on Budaware I did for myself first.
Okay.
Like, these are things that I wanted to watch about my portfolio. These are like the visualizations I wanted for my portfolio, and I didn't have. So I first built for myself, and then I just put them in Budaware for everyone. But these are things that I like to have for my portfolio. I used to have these tools like in my own computer, just running for my own portfolio, because like I'm addicted to the data, to the statistics. I like to have all of this information like right away. And I always feel better like with like these web-based tools that we have in like an Excel spreadsheet with some like the data from there, and then I have to update, or it's not perfect. Like I always look like this kind of web-based platforms for these visualizations.
Yeah, but
what I love about Bulaware actually is that a lot of people don't exactly understand that performance per se, the statistics of performance, the return that investors make, don't mean anything per se. It all depends on the amount of risk that was taken, right? It's really about that risk-adjusted performance. And what I love about Bulaware is that you can really see it clearly with charts, with colors. When you search for an investor, you can see that, all right, this guy had, I don't know, 10% return every year, last 5 years, with very minimal risk. And then you see another investor who had plus 100%, minus 50, plus 200, minus 80% with a lot of risk, right? And this really allows you to make well-informed decisions, because when you go on eToro and you see the investors and their performance, their history, you only see the numbers and the stats, but you don't know how they were invested. You don't know what kind of risk they took in the last years. When I see your performance, Mariano, I'm assuming automatically that your strategy and your portfolio was exactly the same in the first years, right? But things evolve, and the amount of risk taken also changes. And this is something that you really can see by using Bulaware.
Yes, 100%. And this is another of the reasons why I build it. It's also because I want people to understand what they are copying. Really, I don't want to gain a copier who was not right for me, who was not right for my portfolio. I get frustrated when I see someone who, when I look at my copier stats, someone who copied me for 24 hours, I have one red day because the markets were down. And sometimes it's like minus 0.2%, and the person stopped copying me. It's like,
yeah, we know
like, yeah, please don't start your copy if you are going to do that.
They expect you to go up every day, every single day. You must go up. You've been up every year the last years, man.
Yeah, it's like, and it's something that it's just maybe it's not for also for the right people. Like, there are people that want like a lot of risk, like they want to double their portfolio, like they want to lose they are gambling, and it's fine. If you're 20 years old, you are just putting your money that you can afford to lose. Maybe for that person, it's right to want to try to copy someone who may double your portfolio in the next 6 months.
Mhm.
I'm not that person, but I want to make clear that I'm not that person. That I'm investing long term.
Yes, and Bullaware also helps to know that if you're going to copy someone who might double your money in the next 6 months because that person doubled in the last 6 months, there's the same probability that it will halve your money in the next 6 months, right?
Yes.
Because thanks to Bullaware, you can see the risk, you can see the informed risk taken by the popular investor. Do you use it, Dimitri?
I did a couple of times, yes. You brought it to my attention.
Yeah, I did.
When it was
I
released.
did.
I had no idea it was out. And then you brought it to my attention, and then I looked into it, I was like, okay, we're getting, it's like, you know your portfolio because it's yours, but then you get to see it like better because you have so much more to analyze it with. And I was like, you know what? I was impressed with myself. In some point, I was like, okay,
Yeah.
that's quite
Yeah,
good.
I brought it to your attention. So I didn't even know Mariano at the time, huh? But somehow the website came to me. I don't know, someone recommended to me as well. I don't remember who. And I checked, and I mean, it was really interesting to see. And my beta was even lower than I thought that it was. I'm very risk averse, and I see on Bullaware that my beta is very low. And I use it actually as a metric to take a little bit more risk in my portfolio. That's been helpful also to adjust a little bit how I actually want my portfolio to be. The way I thought it was is different from the way it actually was. So it helped me also to adjust my own portfolio. And then I looked at Dimitri, and to be honest, I mean, I knew Dimitri was a good investor, but I knew also the metrics that on Bullaware would make him happy. And I showed it to him. His beta is significantly higher, right? It's taking a more risk, but it's also interesting to be able to compare the different investors, to compare also yourself with the other investors, and see how you can orient your portfolio or adjust, or move it a little bit, do some tweaks to and see how the metrics are basically impacted.
And today I read one of your tweets, Mariano, it was this morning or yesterday. Something Google is indexing. What is that about?
Just that you can just put Bullaware and your eToro username and find your Bullaware stats directly.
Oh, okay. So you can just Google it straight up with your eToro username. Okay. One more question regarding Bullaware. How long it took you to build it? How long it took?
A couple of months. I started actually after Abu Dhabi. I started first with with a GPT. I built like a GPT for eToro, and it got very good reaction. Like even Johnny retweeted it. So and a lot of people like told me it was very useful. They really like it. So I decided to extend it and to keep adding more tools, because I saw like I have some of these tools already for myself, and I saw like people were appreciating it. to also have access to them. So I just open it, and I'm very happy with all the reception I had this couple of months. People are using it. People seem to be happy. So as long as that's true, I will keep adding more features.
So generous of you to spend a couple of months just to provide something that, I mean, it's a lot of work, and like I said, my first thought was like, why isn't he busy enough with his own portfolio and all that? Why does he need to do it? But obviously, it was and thank you for getting it to us, though. It's a
It
very
could
big
be
step.
it could be interesting to ask eToro at some point to incorporate Bulaware as a feature in the offering when you're in the eToro app, to have a tab Bulaware, right? Bulaware stats. Like we have, for example, we have Delta already on eToro that helps you to track your portfolio. I don't use Delta at all because it doesn't tell me anything, to be honest. It doesn't provide me any value add, let's say. But it could be interesting to try to integrate that into eToro.
I would love that. I hope that one day. I hope one day it can happen. I will ask Johnny if we can add it.
Yeah,
Yeah,
I'm sure he'd be open to discuss
that's
it.
a
Maybe
time.
at the next summit, in
That's
September,
time you can
perhaps.
ask in person. I'm sure he's not going to say no. He's very generous as well, and he's not
Yeah,
going
he's a fantastic person, very approachable,
Yeah,
and
he's
yeah.
awesome. Honestly,
So
really, he is.
let me ask you a fun question. Since you are Argentinian living in Malta, when you're watching Argentinian playing football, do you get crazy? Or you are still a nice guy like you look from the camera here? Because I know Argentinian people, they get crazy when they watch soccer. So
Yeah, I like watching it honestly, but the time zone difference is pretty big. All the last games have been weekdays
yeah.
at 2, 3 a.m. on the American Cup, so
Uh,
not a great thing to watch. Maybe if it's a weekend, I do watch them,
hmm.
but the time zone is pretty bad now to be following it, all the matches.
Yeah. How long has it been that you've been in Europe?
7 years. I first went to Germany for 3 years, and then I came here.
Oh, okay. So you've been in Europe for a long time.
Mm.
Akim,
Yeah.
you have a question, I see. You see,
No particular question. I think Malta is an interesting choice. I mean, I really love Malta, the architecture, the food. I didn't meet many people there, but I probably they're nice. Southern Europe, they're always very open, very sociable. Do you have any plans to move elsewhere, or you really like it there
Uh,
in Malta? You
for
feel
the
home?
time being, I'm good here. Good weather, good food. Uh, People speak English, so
yes.
A lot of
I'm
popular investors, they move to Emirates when they're successful. A lot of elite pro, they move to the Emirates. Is that in your plans? Dubai?
honestly not at the time. It's not. Uh, Honestly, I really enjoy being in Europe, where you can just say this weekend I'm going to Italy, I'm going to Spain, I'm going
Yeah.
to anywhere, or
The
like
location of
sometimes.
Malta
Exactly.
is the location of Malta. You are like between 3, 4 countries, and now in Africa, within an hour flight, an hour and a half, you can get in most of Europe. So, and the taxation, I believe, in Malta is favorable, correct, for
It's,
capital gain?
yeah, yes, for European standards, it's
Yes.
one of the best, not the best, but one of the best.
Yeah.
I think all the island small countries are always more favorable than large countries like
Yes.
Malta, Cyprus,
Yeah.
Luxembourg. Also, Bulgaria. I've been hearing very good stuff about Bulgaria,
Hmm.
taxation, and Romania. Also, after visiting Romania and Bulgaria, I went this year to both. I was surprised how nice they are. Like always you hear like, oh, these are like very low taxation countries. So you expect like public services not to be good, roads not to be good, and honestly I was surprised. I like most of the services were impaired or even better than most other European cities. So I was actually very surprised how well they are doing, even though they have low taxation.
Because I thought, and just wanted to finish this up with this what I have, because I would say that you will probably move to Spain since your native tongue is Spanish. Probably you'll be more comfortable in Spain, but you know, Malta works, and thank you again for creating the Bulaware for all the people on eToro and for us to use for free because of your generosity. You're like a grandmother. On Sundays we all eat good food because you made it. So thank you, and thank you for coming. Thank you for taking our invitation to appear on our show. Really appreciate it. Me and Akim really appreciated your time and all the information you share with us. Akim?
Yeah, thank you very much. Thank you for joining our podcast. I mean, for me, it was very useful actually to get to know you and to get to know your strategy. Your portfolio is really interesting. And next time that I mean, I'm thinking how to increase my tech exposure, and then I added you to my watch list. Next time I will straight go to what you're buying, and I will just add it.
Like,
All
well,
right.
okay, thank you
Thank
very
you.
much for having me. This was very fun, and I hope we can do it another time in the future.
Yeah, again, thank you for coming, and thank you for your time.